What is an order? Welcome to the episode about orders. Basically, this is one of the techniques that I use. An order. This is the last opposite candle before an expansion or that is the last buy candle before a sell or the last sell candle before a buy. They are also known as the institutional candles or the IT candles. Like in this scenario, we had this sell, then we have this last sell candle. This is now what we call the bearish, the bullish order block. The last sell candle before this entire expansion. Like initially, the market had been buying second scenario. Then we have this last buy candle before this sell. That is what we call now an order block. And we have two types of order blocks. We have the bearish order block and the bullish order block. The bearish order block, it is the last bullish candle before a drop. And the bullish order block is the last sell candle before an expansion. Then we have some criteria, or maybe the high probability order blocks. And they must meet these criteria. They must be followed by a fair value gap. I'm going to do a video on that. They must be in the premium or the discount levels. And within these levels, they must be the extreme levels. That is the most expensive point and the cheapest points. They must have broken several structures. They must have broken several structures. Like in this case, let's say the market has been moving in that manner. So must break several structures, like break the first structure and the second structure. Then we know the very next time the price will be revisiting this area, it will sell from here and continue with that. So they must break several structures. And then the price must deliver from them at a high momentum. That is the criteria for choosing which order block to use or which order block you're supposed to trade. We also need to identify the used and unused order blocks. The used order blocks, they are formed when the first candle showing the new direction takes out the last opposite candle. Like in a case, let's talk about this scenario. Like this candle, being the last bearish candle, then this is the first green candle. First takes out this before continuing in that direction. Or in the second scenario, where this is the last green candle. So the first red candle first takes out this one before continuing in that direction. That is what we call a used order block. And when you are trading, we are supposed to avoid used order blocks. Then the unused order blocks is just directly opposite of that. That the first candle of the opposite color doesn't take the first candle. Then how do we trade order blocks? You know that we need to trade the unused order blocks. That is the one that price is revisiting for the first time or even for the second time after an impulsive delivery from them. Avoid order blocks that are being tested for more than 2 times. That is an order block that is being revisited for the 3rd time or the 4th time. As long as it is more than 2 times, we need to avoid that kind of an order block. Let's have a look at a real chart. Let's look at have a look at the real chart. Maybe to identify an order block. We have this scenario where this is the last buy candle before this entire sell. So we need to identify now that. Then are the other criteria met? We have the first 2 criteria that it must break several structures. So we have this point being taken out. We have that point being taken out. We have also that point being taken out and this point being taken out. Several structures have been broken. So we know that the first criteria, it has been met. The very next time when the price will be revisiting this area, we know the chances are it might sell from the area. So we have price now buying again from this area all the way to this point for this entire buy. So when price came to this zone where we had our order block, then we see that the price dropped at a very high momentum from this point. So we have that. So we have price dropping from that point. The next thing is after price dropped from here towards the downside, we have this other order block right here. So price also reacted from the order block and bought. Now that the price is revisiting this area for the first time, and also for the first time and second time, and also this is now the third time, the chances are this area must be taken out and price now reacts from this area, because now this is the first time the price is revisiting now this order block. So this is the scenario. We have this order block right here, which is marked by the two gray lines. So we know that the price has not visited this area for the longest time possible, because this will just act as an inducement, an inducement, an inducement. So the chances are price will take out the triple tops, react from here, and sell again to this point. That is how now I get to use these trading blocks or the order blocks to my advantage. Let's have a look at a different chart. I always trade the oil. So this is the crude oil and also gold. Let's have a look at the other chart, that is gold. In this scenario, we have the market expanding from a point. So we just need to identify that the market started by moving, by making this entire move, and also this very sharp gap. We call it, this is what we call a volume gap. So this was the last red candle before now the entire pan. So this was the last red candle before the entire pan. So we want to see the market revisiting the area. So the market now dropped again all the way to the point. Then reacted from here. Now, what are we expecting next from this point? Because now we have several order blocks. We have this order block, we have this order block. But now we need another block that will be within the premium or the discount level. So this is the premium level. So we choose an order block. Right here, we have this candle. So this will have acted as an inducement, an inducement, an inducement. Now, the chances are price might react from that, react from here, and then proceed to this point. Now, before opening a long sell, that is how trade these order blocks. So this is a chart in gold. So definitely just a brief information for those who are going to see this market before the week starting on 19th of February 2024, that the market will keep on buying for the next few weeks until it gets all the way to 2018, where we are going to get a sell from that point. So we pay attention to that zone, because now the gold is buying from 1980. It might go all the way to 2018 before dropping again. So we pay attention to that. That is everything when it comes to order blocks. I will have order blocks episode 2 about the same, because we have a lot to learn about order blocks. People have the wrong information when it comes to order blocks. So we need to pay attention to that.